Hello, everybody. Welcome back to the Penny Lane podcast. In today's episode, Blaine and Bofo are joined by swing trader Oliver Kell. He was the winner of the 2020 U.S. Investing Championship with a 941% return. Oliver discusses his trading journey and how he utilizes price action for his swing trades. A big thank you to our sponsor, Rhoback Clothing. If you enjoyed this episode, please don't forget to like, subscribe, and leave a review.
Hello and welcome to the Penny Lane podcast. Today we have Oliver Kell. Hi Oliver, how are you?
Hey Penny, how you doing?
I'm doing great. Bo, hadn't seen you in a month of Sundays.
It really
Too
kind of has
soon?
been this time, huh?
Is it too soon or are we back on the joke?
It's been a minute.
Oliver, do you know what a month of Sundays is?
I have no idea.
Apparently this is something that people in the South know. Where are you from?
I live in Philadelphia, but I grew up between San Francisco and Boston.
Yeah, I missed the South there.
Yeah,
So, yeah. Well, I am so excited to talk to you. Would you mind giving us just like a little elevator pitch on yourself?
Sure. So my name's Oliver Kell. I trade for a living. I have my own kind of small fund, friends and family, Kell Capital. I basically, traded and I originally prop traded out of college, had mixed results. I then did, just worked on Wall Street. I was an institutional execution trader. Then I got into sales, the whole time just kind of trading my own account on the side. And then in 2020, I won the U.S. Investing Championship. And, I've been trading full time, the last, 2 or 3 years.
Just like that, right? You just won. Just happened.
Well, hey, yeah, I've had a lot of trials and tribulations along the way, and since then in reality, and it's a very difficult game. But trading the stock market, it's every day. Lately, especially, you really don't know what's going to happen, and that's what makes it fun, but also is what makes it challenging. So yeah.
I basically
So
want to go
many
back
questions.
through all of the things that you said and be like, what was that like? What was that like? What did you do there? What did you do there?
Sure.
Yeah.
Yeah. I mean, I'm an open book, so just let me know what you guys want to talk about.
Let's kick it on back to the beginning.
Yeah.
How did you get interested in the stock market and decide you wanted to get in there?
Sure. So, well, it was sort of the family business, sort of. So my dad was a market maker on the Pacific Stock Exchange. So, those back in the...
I already have a question. What's the Pacific Stock Exchange?
Well, so it no longer really exists. I actually don't even know physically if it actually... Actually, I think it's an Equinox gym now.
Of course.
Here he is. My dad's right here. He says there's still a floor. But it was the Pacific Exchange. It's just in San Francisco, just like the New York Stock Exchange. It was the Pacific Exchange, just basically the West Coast Exchange. And actually, the New York Stock Exchange, I don't know when, a while ago, actually bought the Pacific Exchange, and it became ARCA, which was where a lot of the ETF, stuff was done. The last time I actually went to the floor was probably 2011 or so, which was the first time I'd been there. My dad took me in. It was the first time I'd been there, since I was a kid. And and it was a shell of itself. It was more quiet, guys kind of just standing around watching their computers kind of work. I'm sure it was mostly driven by algorithms. But when I was a kid, we would go in there, the floor would close at 1:15 if we had a half day of school or something. I had 4 siblings. We'd go in and we couldn't wait to run out on the floor and all the guys and the paper all over the place. So it was a pretty cool environment, but that was kind of my exposure to the markets, was just my dad being a market maker.
What a, what a
That's
way to be
that's wild.
exposed to the market.
Yeah.
And so floors now, like the floor it's everything's digital now, right? Like to your point, like what like happens anymore?
Well, I guess that's kind of my point. Is I don't know how much there is actually going on the exchange floor. I mean, they are there and they're trading, I guess, but it's all automated. Yeah,
Yeah.
it's all automated.
I've recently found myself in a position where I'm hanging out with a lot of ex floor traders, and these stories do not disappoint. I've yet to hear one that I'm like, that's not what it seems like. It's like all the rumors are true. And I
Yeah.
just, that something about that makes me so, so happy that it really existed.
Yeah, I mean it was I mean, look, it's a lot different. Like I sit by myself all day. I talk to nobody, and really trading in reality, it's like a pretty lonely profession. Whereas, my dad, all his friends worked on the floor, and I know a couple months ago they all got together and stuff. I think you had more of a camaraderie to the profession versus nowadays where it's all electronic, and that doesn't exist. um, Whereas when I was an execution trader, we were on not like an exchange floor, but we were on a floor and we were with a bunch of guys trading. We were executing, we weren't trading for our own account, but you had that same kind of camaraderie, you know joking with each other, stuff like that, which is not the reality of what I do now. So it's definitely much different. And the floor was a really cool environment. Like when we were kids, we loved it. We absolutely loved going in to pick him up from work.
Can
Now, are
you
you,
Sorry, we got so many questions. It's going to be like
I
this. Go
know I'm
ahead,
having a
Blaine.
hard time. This is not as good as your question. Are you an introvert or an extroverted person?
I am. I'm probably like an introvert until I know someone, and then I open up. I would say I'm very, very comfortable, kind of, working by myself. Uh, and I don't. I like the camaraderie aspect. Like I played team sports, I like that, but at the same time I'm also very comfortable kind of being on my own. That doesn't bother me, whereas I do think that is tough for some people. But I'm just I'm kind of used to it, I guess.
So, all right. So you were a prop trader out of
I,
school,
I'm not a prop trader anymore. I
but you
did prop
were.
trade.
Okay.
Yeah, yeah, yeah,
And
yeah.
so what does that actually mean? You're just trading with a firm's money. You're just like one of their traders. Is that?
Sort of. I mean, there's different types of prop firms. Some of them are legitimate, where you do trade their money. Some of them try to tell you that you're trading their money, but you're not really. And I'll elaborate on that. So, like a legit prop firm, a place where if somebody asked me, should I get a job here or something like that, is going to let you trade their capital, and they're going to take risk on you. They're basically betting on you, and they're risking their capital by letting you trade it, right? Now, I think there's a lot of these pop up prop shops, which to me are kind of modern day bucket shops, where you put up 5K or 10K or whatever it is, and they let you trade their money, but in reality, you lose whatever you put up, you're out. Um, and oftentimes, they're making like a penny a share on your commissions or whatever. That's actually the type of place that I started at. I started at a place where I put up like 5K. It was a total scam, bucket shop, and I would not recommend it to anybody. I did learn via the experience from just watching the market every day, but I was a net loser. But I did from there end up getting a job at a very legitimate prop shop where,
So
yeah.
so do they? I mean, why would you do that in the first place? Do they teach you a system? Like, what's the draw?
I mean, here's the deal. When you're 22 years old, you think you're gonna go trade and make a bunch of money, and that's the draw, right? You're gonna just go kill it,
But
because
but why
that's.
not do it yourself? I mean, why do you need a firm?
I mean, that's a very good question. That's kind of what I tell people now when they want to, go work at a firm, and they've already had success and they've built their account up a little bit. And I kind of say, well, you've got a stake, you've got money, why do you want to go work at a firm? Um, because that's my personality. I didn't really want to work at a firm. That was kind of how I thought you got into the business, starting out. I didn't have a lot of money, and I didn't have anybody who was going to give me any money. So it was kind of a way to get started. Um, I mean, it's a good question. Maybe the answer is people want to like have a mentor or whatever. There were no real mentors, but the way they taught us to trade at the time, we looked at the level two screen. We found big bids and offers, and let's say there was a big bid, we would get long in front of the bid and like average down into the bid, and if it started to print, we would hit out. So the idea, and you had to be really, really quick. Um, and for me at least, the strategy didn't work. Now, I think with some of my knowledge now, I could have probably had a little bit more success with that than I did at the time, obviously. But generally speaking, I think it was a strategy that worked more maybe in the 90s, that, now with all the high frequency trading and all types of stuff going on and all the fake kind of order flow, it doesn't work as well. I don't really know the best way to answer that, because obviously at one point in time that strategy did work. That's why they were teaching it. But I think probably by the time I got there, it was, kind of a dying strategy.
So then you were an execution trader. What does that mean?
Yeah, okay. So from there, so actually, then I went to a real prop firm and I did international arbitrage, with a bunch of guys that split off from First New York, which is a pretty, well known, legitimate prop firm. And so I did international arbitrage. I was an assistant to two guys who had very, very different uh, trading personalities. One of them was a straight up gunslinger. I mean, he really swung for the fences big time, and he had big, 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 big ups and downs. And the other one was like very, very risk averse. He pretty much day traded this one stock called News Corp like every day, that traded between Australia and the US. And, he was trying to make like a couple grand a day. And I mean, you'd swear some days like he lost $1 million, and, he was down like 2 grand or something. He was just like so, risk averse. Um, and so it was good to kind of see both those types of personalities. And I'm not going to say what's right or wrong, or whatever, but the risky guy ended up kind of blowing up not just him, but a couple guys in 2011 when the market got crazy. Technically I was a prop trader, but technically it was a hedge fund, and, the fund blew up. Um, and, so lack of risk management and kind of swinging big obviously played a part in that. So that was kind of my next stop. And then from there, I'd basically been working for like 2 years. When I did international arbitrage, I had actually started more swing trading US stocks after getting in a hole originally. And I started to make a living and make some money. And I actually felt like I was like really, really starting to turn the corner, when, we went under, which was pretty frustrating, because I felt like I was like finally breaking through after, just all this hard work. But when they went under, no one in my family really is a big believer in trading in the markets, because, my dad was a market maker for 40 years, but, we kind of saw the ups and downs of that. He blew up twice, and it was pretty tough, at the end. Um, So basically, I had some pressure, like, hey, go get a real job or whatever. And I ended up getting a job in San Francisco. I was working in Stamford, Connecticut. I went out to San Francisco and I got a job at a firm by the name of BTIG. Um, awesome firm. And I worked on what's called an outsourced desk. So they had what's called sales traders, mostly in their New York office. We had some of them in San Francisco, where those are guys who are literally like straight up like hunting for order flow, trying to, you know, find buyers and sellers and match them up and put trades on the tape and do whatever, I consider them like real hustlers and really trying to do whatever they can to get in contact with funds or anybody that needs liquidity and basically match them up with, if they have a buyer, match them up with a seller, etc. On the outsourced desk, we did a little bit of sales trading, but we mostly had clients. So let's say we had like 10 big hedge funds and they didn't want to hire an internal trader at their fund. They would hire us. We worked with them every day. We did all their orders. If they wanted to, send an order to Goldman Sachs or send an order to JP Morgan or whatever it is, we would do all of that for them. So they literally outsourced the trading in their fund to us, and we did it all. Like, we knew their portfolios. A lot of them were prime brokered at BTIG, so we also kind of handled their back office too. And the great thing about that for me was I got exposure to so many different types of strategies. We would trade we had this one fund that I don't know how many billions they ran, quite a bit. But they would like run billions of dollars and have like 8 to 10 positions, but they were essentially activists. They'd be buying companies in like bankruptcy. I traded for another fund where same deal. They ran so much money and they would have like 4 positions and they'd be buying millions of shares a day of a stock for like months, just like trying to buy like they were trying to buy the whole company. But they obviously couldn't, but so they'd buy like 10 or 15% of it or something. And then very few like technical type traders. Obviously most of them were more like deep value guys. Or I traded for a fund, really great guys, where they ran like a covered call strategy. So we'd be like buying Walmart, selling options against it. Did a lot of corporate bond trading for another guy. So I really got exposure to a ton of different ways people approach the market. But key for me is I basically worked for one guy as a part of his team. And I got to just learn so much about how the market works. And he also liked to trade his account. He liked to trade the futures markets mostly. And so like he had like a passion for the markets that kind of rubbed off on me. He loved that I was enthusiastic about the market. And so, yeah, it's just a great place to learn about the markets, all the different players, and had the camaraderie aspects that we talked about. It was a really fun place to work.
Bo.
Blaine.
We're hat twins.
Yeah, we are.
Yeah, we are. I'm so excited that we're sponsored by Rhoback now. I have been wearing my gear ever since it came in the mail, and I love the colors, but I especially love this little dog. I wore him to the pool last night, and people were giving me the thumbs up.
Yeah, this stuff is awesome. I had heard about it before and always wanted some, but now that I have it, it has exceeded all of my expectations.
Is this your first time receiving a gift in the mail from a company and like opening it and checking out the product?
It might be. It certainly is associated with the podcast.
I have gotten those before, and I was blown away by the quality of this product. It far exceeded what I thought that it would be, and I truly think I'm just gonna like live in it all fall.
Yeah.
It's so comfortable.
Yeah, I've been playing golf a lot this summer, and so I like all my golf gear, but the thing about golf shirts is like the sleeves are always too long and they're always too baggy, and like, I'm relatively in shape guy, so this fits me perfectly. I still have full range of my arms to swing a golf club, and like I could wear this doing anything, not just golf. Like they got hoodies, they got quarter zips. It's like nice and stretchy. I love every single thing I got.
Me too. Me too. I love it. It all looks so good together. It's part of a set. And I feel so thrilled to be able to offer our listeners a 20% off code, which is
Penny 20.
all right. So you go to rhoback.com, which is RHOBACK.com, and you just enter penny 20. You get 20% off, and thank us when your order arrives because it's lovely. You also know how much I love opening experience. Like I'm such a snob about packaging and the way things are presented, and it was a treat.
Yeah, the shit's awesome. I'm not like,
Yeah.
don't even have to like, I would just promote this to anybody regardless of a sponsor or whatever, because this shit slaps.
Also, you've already been like low key pumping out the penny 20 to your closest friends because you really believe in it.
No, absolutely. I'm sending this to all my friends because it's shit I think that they're going to want anyways. So, why not take advantage of the discount and rep it everywhere?
Totally. Thank you, Rhoback. We appreciate you.
So, okay. So much interesting in there. And one piece I want to ask about before I forget. So, your dad was a market maker for 40 years.
Yeah.
So do you think, I mean, that has to have rubbed off on you in some kind of way. I mean, do you have a understanding of the markets and how they work through that?
Sort of, a little bit. I mean, my dad was an options market maker, so really, my dad was really, really good at doing math very quickly in his head. The Black-Scholes model is kind of like an options pricing model, and he was probably one of the best at mentally doing quick math. And then also they had at the time what they call open outcry, which to me is like literally free money, where I don't know, let's say like a big institution comes in and says, hey, we want to buy 50,000 shares of Microsoft at, $100 or wherever it was. And, the stock's trading at, 99 or something, because there's like delays. It wasn't like total electronic markets. And it's like, oh, there's like a free 50 grand, which obviously like that doesn't really exist in today's markets. So there was that, but I don't trade options at all, which there's a story behind that. And also I think kind of I'm a directional trader, whereas for him, I kind of view, when he's a market maker, if someone wants to buy stock, he's obligated to sell the stock to them. And then he hedges that via options. So technically he's what they call delta neutral, essentially saying you have no position. Like that's your goal, is to be net neutral between the options and the stock. And then really, you make your money when those options, decay and expire, because most options do expire worthless, which is why they say, the pros are generally selling options. Those would often be guys like my dad who'd be like selling the options against their stock. And sometimes the options expire worthless and you make money on the stock too. So, but he was very good at that. I think kind of when computers showed up and could do the math quicker than him, he kind of lost his edge there, which, sort of made it tough to make money.
So you go. There's like so many things I want to ask.
All right. So,
you.
yeah. So this term market maker, right? And like we talk about it, like when we trade, like, oh, market makers are doing this, whatever. And I'm usually trading small caps. Like that's the context that I'm.
Sure.
What does that actually mean? Like in my head, the simplest version is there's some guy on the other, like somewhere on a computer, and he's just got control of this stock. He can make it do whatever he wants. Is that just totally wrong?
I look, I hear there's like NASDAQ market makers and all this stuff. And I know there are. I don't really know that there are market makers in the sense that there used to be when my dad was a market maker, where, literally if someone wanted to buy, they had to provide a market. They had to be a seller. And when somebody wanted to sell, they had to be a buyer, which brought stability to the marketplace. which I do know technically there's market makers today, I guess. What they're doing and how they're doing it, and what gives them the right to be called a market maker or whatnot, that's beyond me. I'm not really sure.
Can anyone be a market maker if they just have enough money? You can just.
Well, I mean, look, I don't know about today's market makers. My dad was what was called an LMM. So like he was a lead market maker in Microsoft, and he was the lead market maker in Lockheed Martin over the years, which basically meant, he was required to make a market in those specific stocks. He wasn't running around trading, a bunch of different stocks. He was making a market in the stock that he was an exchange appointed LMM. So he was a member of the exchange, and he worked in that pit and made markets in those specific pits. I don't know how it works nowadays, and honestly, I don't know what kind of advantage they have or disadvantage, but I know that's how it worked when my dad was a market maker.
So their job is to provide liquidity for buyers and sellers.
Exactly.
Okay. Yeah. Cool. I did not know that until just now.
Yeah.
So your dad, this was before everything was kind of digitized and done by computers and everything?
Oh yeah, my dad left the floor in 2001, I want to say. He was on the floor from like 74 maybe or something like that, or to like 2001, and then he traded off the floor maybe till I don't know, maybe '09 or so. And he still dabbles in the market now, but not he's retired.
Do market makers make a salary, or do they make some kind of commission off what they're doing?
So my dad traded his own money his whole career. He never worked for a firm. So I guess hopefully he made money. But there's no guarantees. Like, yeah, he didn't make a salary or anything like that. It was just, if he made money, he made money. If he lost money, he lost money.
Wild.
So
okay. This term, when you said execution trader, that's when you were doing the outflow desk, you said? That's
outsource, yeah. So for
outsource?
that, I was essentially a broker.
Okay.
Meaning, let's say someone gave me 100,000 shares to buy. We'd maybe make like a penny a share, 2 pennies a share, or whatever, commission. And then me, I got paid a salary plus bonus from my boss. So, I got paid a salary, and then let's say we had a really good quarter or something like that. I can't remember exactly how he paid me, but if we had a really good quarter and we did a ton of order flow and we did a ton of commission, he'd pay me a bonus on top of that, which is a lot cheaper than being a trader.
So these are probably maybe seemingly stupid questions to you, but like, I came into the market only in the past 3 years. And so everything I know is digital. Like I just click a button and it happens for me. Like it's hard for me to imagine someone like facilitating if I want 100,000 shares or something. Like to me, I just go in my broker and
Well, so like a lot of these guys, like, I mean, they're trading different types of size, and maybe they're literally trying to buy 1 million shares of a stock that trades 100,000 shares a day. And so maybe we're buying like 5-10K a day for like 3 months, and then we find someone else who's trying to sell 300,000 shares, and we print that 300K print to the tape. So that's like, look, if someone wants to go buy like 100,000 shares of Apple, like it's no big deal. Did we do that? Sure. But our real value was in finding order flow and names that were a little more difficult to buy. Or, a lot of these guys, they didn't want to deal with the trading. Like they wanted to research companies. Think of it. They're running this big business. They've got $1 billion fund. And think of like any company, right? You can't do everything. So you either hire somebody to do it for you, or you hired us to do it for you. And maybe they didn't want to have to manage somebody. They just wanted to like focus on finding good ideas and reading 8Ks or whatever. So they hired us, and that took it off their plate. Everybody kind of has different reasons why they would hire an outsourced trader or a broker. But we were able to find order flow specifically in kind of less liquid stocks, or we were able to just take that whole part of their operation off their plate, so they could focus on what their real skill set was.
So so we've got like this other half of your life that we still need to get to, but I do have one question that I want to cap up my questions for the first half of your life. What would you say, looking back at that time that you traded for prop firms and these bigger firms, this kind of institutional Wall Street stuff, in addition to what your dad did and your exposure to that, what would you say to someone like me, who I trade on Thinkorswim? I came into the market 3 years ago.
Right.
What do you know about the markets that someone like me probably doesn't? Like, is there something that you would say, like one or two things that's like, it's really like this and you probably think it's like this?
Well, I mean, in reality, the main thing I would say is that the price action and what's actually happening in the market is a discounting mechanism of everything else. So, if some outsourced trader is buying 1 million shares of some stock that trades, 100,000 a day, you're going to see that in the price action. Like, I'm going to move the stock. You don't even really need to know that I'm buying. You just, you see it in the actual price action. So I would say the price action and is always what's actually happening. So there's, the news wants to give you a reason for every single move in the market. Hey, we went up, because the CPI report was down. Then the next day, we're down because of inflation. It's like, wait a second, those are literally the exact same things. That's so contradictory. So they want to have a reason for everything, but the reason the market goes up is because more people are buying than selling. And the reason it goes down is because more people are selling than buying. End of story. You don't need to know a whole lot else besides that. So I would just say the key is you got to get experience. Advice I was given is, if you want to learn how to trade, you got to start trading. I'm not saying go in, 200% long some crazy stock or something and swing for the fence. No, but you got to get in the market. You got to, start trading, get experience, realistically probably lose some money, because you have to kind of get your emotions involved in the market, because that's such a big part of trading. I mean, it never stops. Definitely, for me, my emotions affect what I do sometimes, unfortunately. And you kind of have to trade to get that experience. Now, really, I was able to have exposure to the market via all these different roles, which I definitely kind of soaked up little bits and pieces of information, probably without even realizing it. And so I probably do have some intuitive thoughts on things sometimes that come from that. But, you learn how to trade by trading the market and making mistakes and studying your mistakes and learning from them. And that's a never ending challenge. I mean, even when you learn to trade, you may mess up more than you do things correctly. So anyone who says different is probably not telling the truth.
So that kind of transitions into okay, you then are, I guess, right after your time at those firms, 2020, you said you won this investing championship. And so I want to hear all about that. But at this point, are you a technical analysis trader? When you're looking at these trades and how you trade and stuff, is that all volume, price action, charts, or are you fundamentals?
I'm mostly charts. I mean, I like to try to trade good fundamentally sound companies that are growing, big earnings and sales. But I am definitely, a price action trader. My strategy is based on the trend and the moving, I use moving averages kind of as a reference guide. But yeah, I'm a price action guy for sure. And ideally, I can be trading stocks with good price action that also have good fundamentals. But I think the price action will discount the fundamentals. Like a lot of stocks top when their fundamentals are the best, and maybe they start moving, and then they have a big earnings report or something like that. So I think the price action, if I didn't know the fundamentals, I think I'd be fine.
And you're a swing trader?
Yeah, I'm a swing trader.
We just spoke to a tax person who does traders taxes, and he taught us a lot of stuff. But the thing that I will always remember from that interview is he looks at traders P&Ls, like very successful traders, and he said that options traders are the ones that make the most money year over year. And what is so fascinating to me is after working with some of the people I've been working with who are incredible swing traders, it's the percentage that you can grow your account swing trading actually so amasses what you can do with amasses, maybe not be the right word, but it seems to me like swing trading is the ultimate way to really, really, really grow your account, much more than options. And I thought it was so fascinating that he said that. Bo, do you remember
Well,
that?
I wouldn't say options and swing trading. I don't trade options, but you can swing trade with options. To me, options just provide leverage. So, yeah, you can make more money with options. You may be taking more risk depending on how you're using those options. You also may actually be reducing your risk depending on how you're using those options. If you're just using options to get leverage. So here, I'll tell you the story about how I blew up my first account.
Ooh, let's hear it.
I had a small little options account, and I was buying slightly out of the money calls in this Chinese telecom stock called NQ Mobile. And I probably, this was probably maybe a 3 or 4 week trade, if somewhere in there. This was 10 years ago. And I would basically max out my account and buy as much calls as I could. And as the stock would go higher, I would roll those calls into, a new set of option strikes, after, 2 weeks or something, because I had more buying power. And basically I was just leveraging like crazy. And I basically took the account up, well over 1,000% in 3 weeks. And then Muddy Waters came out and said they were a fraud, and I lost all the money in 20 minutes. That's an example of using options for leverage, which I think a lot of people use options for that reason. And I would say that's a short-term fix, if you will, in that you can get a bunch of leverage, you can grow your account quickly, but eventually you're either going to run into a situation like mine, which doesn't happen that often, but it happens, or you're going to go on a bad streak where you lose, a bunch of trades in a row, and you lose that premium until you don't have anything left in your account. So if you're using options in that way, and you're going to show me hey, I did 10,000% last year, I'll say, hey, that's awesome. But honestly, I probably literally won't really care. Now, the alternative way, I think more advanced options traders who trade directionally, there's way more sophisticated ways to use options with spreads and all types of stuff. But there are people who will use options who say hey, I'm going to buy a call option on this, and I'm doing it not to lever up, but because I know the premium that I'm paying on these calls is my maximum risk. And they're looking at that as their max stop loss. And oftentimes they're not even trying to lose all that premium. They have an actual stop in place too. And, I would say that's a much more responsible way to use options rather than just piling your whole account into a bunch of calls so that you can, get a bunch of leverage. It kind of brings you trying to make a ton of money in 3 weeks, or, you trying to make money consistently for 20 or 30 years. So, yeah.
So talk about this investing championship. What is that? Do
Actually,
you enter this?
I want to talk a little bit about that. Do you know who Ben is? His Twitter handle is Pattern Profits.
Yeah, I know of Ben.
So we interviewed, or I don't think you were on that, but I interviewed him not too long ago, and he was like considering getting into this investing championship, and I was like,
Yeah.
oh my God, like I have to be your hype girl. We've got to go on tour. Like this is like the most amazing thing. And then he ended up not entering. But when he does enter, I'm so psyched for it. Yes. Tell us all about it. I'm very, very into it.
I mean, it's really not that big a deal, in my opinion. I think it gets, like, people think it's a bigger deal than I do, for sure. Basically, I've been trading my account and, successfully for a couple of years. And, I told my wife, like, hey, I'm going to enter this thing. I think she said, like, oh, if you win it, you can go trade full time or whatever. Just, like, totally joking or whatever. And so I enter, and, I just, like, traded. I didn't even really realize it was that big a deal. And it just so happens that the year I did it happened to be 2020, and I put up a big number. But I just did what I try to do. I, try to buy breakouts of, good charts, and, and it just kind of happened. But, that's really it.
Who puts it on?
What?
So it's like how many people are involved?
I think it's different every year. I think the year I did it, there were a couple hundred people. I don't really know because they don't tell you, but it's put on by this guy, Norm Zeta, who's, I think he lives in LA. And, you basically like pay a couple $100. I think it was like $300, and you enter, and you're trading real money. So it's legitimate. You're turning in your statements every month. And, you see who wins.
Do they let any Joe Schmo off the street into this thing, or do you have to like prove something?
I think if you're willing to pay the fee, they let you in.
There you go. Okay.
Yeah.
I didn't know that. Maybe next year, Bo.
But
Yeah,
you can trade however you want. Doesn't matter. You just got to grow your account.
Well, so there's a couple different divisions. I was in the stock only division, which means you can just trade stocks. There is like I guess like an open division or something where you can trade options, futures, whatever you want. And then there's like a $1 million+ account division or something like that. There's like 3 or 4 different divisions, but I think the one everybody kind of pays attention to is, the stock only division.
Which is the Mark Minervini division, yes?
Yeah, Mark was in the $1 million+ account division, and then I was in the not $1 million account division.
Fair
Do
enough.
you trade similarly to Mark Minervini?
I would say I've learned a lot from Mark. I mean, probably similarly, but different at the same time. We both use charts. We look at chart patterns. I don't 100% know the exact way Mark trades, but I've read all his books, and they've had a definite influence on me. And then Mark's the king. Mark's the best. So definitely someone who I pay attention to and try to learn from, for sure.
So, are you familiar with Kulamagi too?
Yeah, I know Kualamagi. Yeah,
Okay.
I mean, he and I trade very similar. He and I trade very similar.
Our good buddy, Real Simple Ariel, references them all the time. I know he's a big disciple, so that gives me a frame of reference for how you trade. Then,
Yeah, Kualamagi and I are probably, we're probably nearly identical, almost. If I would say.
cool.
That's amazing. Now I know exactly how you trade. I've spent
Yeah.
hours and hours and hours learning it. You know what I like about it, and I hope this isn't insulting to you at all, but I like that it is like when really, really boiled down to it, it is simple in like principle. There's not a whole like 15 different things you have to jump through and da 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 da. It's a fairly like if this then that. I'm going to follow the method type way. I hope I didn't overstep there.
No, I mean, literally, simple is the way to go. 100%. I mean, what I do is very simple. Doing it well is more complicated, but not because of the strategy. it's because of usually yourself. We just get in the way of things. Um, you make an emotional mistake, you overtrade, you you put on too much risk at once, or something like that. Most of the issues with my trading, at least, are self-created because my strategy really is extremely simple. Um, Now, interpreting the market and trying to put yourself in the best situations, there's definitely a skill set to that without question, but it comes with like time and experience, and there's no real short. You're not gonna like read a book and like know how to trade better. I mean, you might have a better sense of a strategy or something by reading a book, but applying that strategy can only really be done by doing it.
How many times in your life do you think you've used the phrase 3 to 5 day momentum burst?
Never.
Oh, I have to tell Ariel. I think that's his favorite. I think it's his favorite phrase.
Yeah.
Really enjoy it.
So now you trade for yourself and family and friends. And how does that
Yeah.
work? They give you money and then you just have one big pool and you trade it all,
Yeah.
or like do you do different things with
Yeah.
other people, or
Nah, it's all one strategy. So basically, it's nice. Interactive Brokers has this software where, I can take, let's say like 10 different accounts or whatever. And let's say I want to put like 10% of the money in Apple or whatever. It pools the money, it buys 10%, and then it kind of allocates it to each account, depending on the account size and things like that. So I would say that the way that Interactive Brokers allows you to do that is something that didn't exist maybe, I don't know, 10 years ago or something. So yeah, it's nice.
you're someone that does something and has experience that like I've always wondered about. So I don't even know what questions to ask. I mean, I like the market maker stuff, like what it's like trading at a prop firm, all that stuff is just completely, I'm a COVID trader. I came in, I've only traded for myself from my own computer for the past 3 years. So
Yeah.
your experience is fascinating to me.
I
Yeah.
have a question.
Sure.
I've recently gotten to be really good friends with this trader named Tom Canfield, who,
Yeah. Tom's the man.
yes, I love Tom so much. And I talk to him all the time, and he reminds me of you. So you and I have been trying to schedule this interview for six
Yeah. Wow.
months or something.
Yeah.
And you said to me, like, the market is not in a place where trading is easy for my style of trading.
Yeah.
Didn't you say something like that?
I
Something.
mean, yeah, it's been like a very difficult market for the way that I trade. I generally hold stuff and add to it when it's working. And, that's not a good strategy when, the market reverses every like 2 or 3 days.
Totally. And so, Tom, every time I talk to him, he's like, the wind isn't at your back. Like, the
Yeah,
number one thing is market condition, and we are not in a healthy market for my style of
sure.
trading. How I'm so interested in it. I'm not a very good trader. I don't like it took me a very long time to understand this, but how long did it take like you or Canny to like realize, hey, this market is turning, like from the highs of COVID trading?
Well, one, I would say like I would not put my experience level on the same level as Tom. I mean, Tom's been doing this way longer than I have, and he's got the scars to prove it. I would. He says it. That's the only reason I'm saying it.
Yeah,
Um,
yeah, yeah.
yeah, I have some scars for sure, and I've definitely been humbled. Like actually, like pretty much every week. Um, but I'm definitely still learning as far as like how I know we're not in an uptrend. I basically use the moving averages and higher highs and higher lows, and when we dip below or break below the 10 and 20 period moving average, for me, depending on how it happens, that's like a short signal or just a signal like, hey, we're in a downtrend. um, so, you know, if like that's like actually just strategically how I see it. If if that's your question.
Yes. Do you trade the short side?
I do trade the short side. I traded the short side I wouldn't say very well, but I made money, probably the first, third of the year or so. And then I got chopped up more playing the short side, where maybe I would be right on the trade, but the volatility would kind of knock me out. Um, I have not really traded the short side much up until this year, um, for literally the reasons I just said. Is the volatility is so much higher. It can be more difficult to trade the short side. With that said, I think if we have another bear like this, at some point, I think that I'll be much more prepared and comfortable trading the short side. I just hadn't had a lot of experience with it. So, initially I made money, and then I started losing money trading the short side. Um, and, I'm hoping that we're going to be getting into a better market environment. I'm not positive about that, but I'm hoping. We'll see. I'm seeing some good things the last week or so.
I mean, these oil and energy names, that didn't come from me. That regurgitating other information I've heard, but
Well, yeah, I mean they had a nice run here, but I'm starting to see ideas, in more small cap type names and things like that, and starting to see big earnings gaps that's a really good sign. We haven't seen a lot of that the last, what, 9, 9, 10, really last 2 years. We haven't seen a lot of that. And we're just starting to see that a little bit, so we'll see if it continues. Um, but I'm cautiously optimistic, I guess I should say.
Where do you see this is kind of a two-part question. So COVID was obviously like an extreme market environment in a lot of ways, right? And I guess my first question would be like, what did that do to the market that maybe will make the market never the same again? Or do we get back to like how it was again? Was that just something crazy and then it kind of evens out? And then the second part of the question is like, similar to what you're talking about with your dad and how the floor used to work back in the day and now it's all digital. Where do you see trading going like as an evolution?
Sure. Okay. Uh, so I don't know much. So I'll just these are opinions
Okay.
versus like, what is actually going to happen. Um, so like my theory on COVID is COVID I think was probably similar to like the 2000 market where I think the actual COVID correction was like similar to the 98 correction, and then the move in 2020 to me was kind of similar to the 2000 internet bubble blow off, where we saw just euphoric uh, returns. Everybody's making a ton of money, the rocket things or whatever on Twitter. Um, and then on the backside of that, we've just seen growth stocks drop 85, 90%. I'm sure there's people who are still, YOLOing all the way down. The Bitcoin crowd has been destroyed. Um, Basically, risk on assets had the air taken out of them. And to me, that's because they got so euphoric. When things just go straight vertical, it often doesn't end well. Um, and that's really what happened with this kind of COVID blow off top, is what I think it was. I think it was a blow off top from when we broke out of the lost decade in 2013, and we basically rallied, and really we bottomed in '09, but we officially kind of got going, to me at least, in 13. And it ended in, it ended in like January of 2021. And now we're going through to me, we started the bear market in January of 2021. Even though the indexes went higher, the majority of stocks really started going lower. um, and There's a lot of different theories as to where we go from here. You have there's a couple different camps. There's the camp that says, like, this market's gonna just go down 90% and, like, we're all screwed, and, put cans in your basement or something. Which that could happen. I'm not saying it's not going to happen. That's happening with the Chinese market. Um, but my guess is that's not what's going to happen. I base that on nothing other than I'm more optimistic than that. Um, the other camp is kind of like, and this I could see happening, where we had, like, just magnificent returns for a long period of time, and after the internet bubble, we had a 10-year period where basically stocks went nowhere. And could we have something like that? Absolutely, we could. Whether we do or don't, I have no idea. Um, and then, the third camp would be, this was a 9 to 18 month bear, or whatever it was, and we're gonna repair, and there's gonna be new leaders, and we're just gonna, like, rip back to new highs and go on forever or whatever. Um, that could happen too. I mean, I do think over time that, betting on the U.S. stock market with a long enough time horizon is generally a good bet. It has been, for the entire, you know, forever. For me though, like, I'm trying to focus on, I mostly trade, like, the intermediate term time frame, like, generally between the earnings cycles, maybe, 2 to 12 weeks or so. And I'm trying to not get into any of those prediction type scenarios and just focus on the moving averages and my strategy and where the market's going. Look for stocks holding up when the market sells off, and you know try to not pay attention to anything else. That's really my goal. And then, sorry, the second question
I
was
should
like,
have asked it in two pieces instead of
yeah,
together
sorry.
like that. But yeah, the evolution of the market, both from technology standpoint and just
Sure.
where do we go from here?
Sure. So, I mean, that's a really good question. I mean, you hear people talking about, like, artificial intelligence and all different types of ways to game the market, if you will. And, could somebody take my strategy and just, like, make me obsolete and run it better with a computer, or something like that? Uh, which, I mean, I really don't know. I will say that I kind of worked, doing some stuff with AI. People were kind of looking at my strategy, trying to see if they could, emulate it. And I just don't think there's really, at least for the way I trade, a real replacement for the well trained eye. I do think from an emotional perspective and making sure you follow your rules and stuff, certainly doing things with a computer could be helpful. Um, but at the end of the day, and this is a self-serving way to say it, but I do think that the way that I trade will always be there, because all I'm doing is looking at what people are actually doing in the market, buying and selling, whether that's a computer or another person, or whoever it is, trying to decipher what's happening and make decisions in that manner. Now, does the market start to trade differently? Like, maybe, you talk to people who've been doing this 40 years, they'll say, oh, there's no market makers, or the uptick rule's gone, or whatever it is. It's so much more volatile now. And I guess, one, I didn't really trade in those eras, so I don't really have a frame of reference. Um, Two, I would just say, Mark Minervini, we talked about Mark. Mark will say, the market hasn't changed, and he's been doing this for 40 years, or 37, 38 years or something. And I would say, well, like, he's got a pretty good track record, and he's still doing the same thing he was doing when he started. So, you know, I'm going to kind of just keep doing what I'm doing. And if I do have to make adjustments, that's part of the game too. my dad, for example, computers made him obsolete the way that he traded. So he would have had to reinvent himself and figure out new ways to trade. A lot of these market makers who worked on the floor were never able to transition to trading off the floor. I happen to know a guy who did it well, and he had to reinvent himself. So that's part of, being involved in the markets and having longevity, I think.
Interesting. What about from like a government policy perspective? Do you think that retail trading will ever be obsolete, or, I mean, will they take that away from us,
Hey, I don't know.
Is that a valid concern for me to even have? I mean,
I would say it's not something that like I sit here and worry about, but
Yeah.
look, this is how I make a living. I do have work concerns, if they want to like do crazy tax type stuff where it's like I'm not a high frequency trader, but I guess by their rules or whatever, like maybe I would be, I do worry about stuff like that, but it's also at the same time kind of out of my control. So it's not something I invest a lot of my energy on, just because I get one vote and, whatever.
okay.
Oliver, I have one last question for you.
Yeah.
How have you enjoyed your name over your lifetime?
My name? That's a really good question. So it's funny you asked that, because when I was at, everybody's naming their kids Oliver nowadays.
I have a son named Oliver.
Yeah. Well, I love my name, but when I was a kid, there were not that many Olivers, and I I wanted to be like a Mike or a John or something.
Sure.
But then as I got older, I realized, my name was a little unique, and I learned to really appreciate it. And my family, I have 4 siblings, and we all kind of have, I guess, like the old English type names, Abigail, Frederick, Oliver, Arthur, and Walter. And
Love it.
so, I appreciate my name for sure. So I love it.
So I had a very, my name is Blaine. It's a weird name. And growing up, I spent all this time being like, I need a nickname that's much more like, my first name's Elizabeth. So I was like, Liz. Liz seems like a great name for me, just trying to blend in. And then now I wouldn't trade it for like anything. I really, really like it. And when I had my son, Oliver was not as popular as it is right now. But I did some research by asking some Olivers how they liked their name. And I have yet to find an Oliver who said, who didn't say, I love it. Like, all Olivers seem to really like it. So I feel like, despite the fact that it's popular, it's a good choice. It's a good name.
Oh, yeah, I think so, for sure. There's a reason everybody's naming their kid Oliver,
It's a good name.
Yeah,
good, strong name.
Exactly.
Well, Oliver, this was worth the wait. I really, really enjoyed having you on, and I appreciate you taking the time.
Yeah, absolutely. Thanks for having me, and I hope this is helpful to some people, and thanks, guys. I appreciate it.
Of course. Happy Friday.
All right, you too, guys. Have a nice weekend.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.